After testing more than 100 Claude skills for finance, I learned which ones are actually extremely effective for finance professionals, because most finance professionals using Claude skills are still operating at maybe, I'd say, 20% of what is actually possible. Because most skills sound impressive on the surface, but finance work has very different standards when it comes to a lot of these things. The output has to reconcile, it has to survive review, it has to connect across multiple layers of analysis, and it actually has to support decision making. I'm going to walk you through the 6 high-level skills that every finance professional should use and explain what they are and show you how to use them yourself so that you can consistently deliver finance grade output. Now, if you want the prompts, the install commands, and all the data sets from this video, they're in my free community, which is linked in the description below. Before I get into the 6, it's worth being clear about how Claude skill is different from a normal prompt. When you prompt Claude directly, the response quality depends entirely on how well you describe what you need. The skill removes that dependency. It is a packaged workflow with its own instructions, its own validation layers, analytical logic, and output structure. So sometimes the skill ships on its own, and sometimes it comes inside a plugin that bundles it with the connection layer that it needs, like a link to a spreadsheet, for example, or a warehouse system or financial data feed. But either way, when you trigger it, Claude loads the defined framework and then follows it automatically. The outputs are more consistent, more complete, and far less dependent on how precisely you phrase the request. Skill 1, explore data. The first skill I'm going to show you is explore data, and it's available inside the data plugin. So the job of the skill is to take an unfamiliar data set and tell you whether the data is actually trustworthy enough to use. Now, in practice, finance teams skip this step because it's the slowest part of the job, and that is exactly why broken data ends up inside executive reports where it really shouldn't be. It works on uploaded Excel, CSV, JSON, and Parquet files, and on live tables from Snowflake, BigQuery, and Postgres. Now, once the data loads, Claude reads the structure on its own. It figures out which fields are metrics, which are dimensions, and which are dates, and then it starts profiling the data set against finance grade quality checks. Now, it looks for the issues that quietly damage downstream reporting. So that could be missing values, duplicates, broken formatting, negative balances where they shouldn't exist, things like that. Then it flags which metrics are most useful for trend analysis and which dimensions are best for segmentation. So by the time it finishes, you already know what kind of analysis the data can actually support. The way the skill is structured matters because it follows the same sequence that a senior data analyst would follow. It reads the dataset, it profiles it, it surfaces the issues with the highest reporting risk, and then it recommends what the data is actually suitable for. Now, the whole thing behaves like a discovery audit running before anyone is allowed to build a model on top of it. To show you what this looks like, I open a fresh session, I point Claude to the working folder, and load a transaction level enterprise dataset covering revenue, customers, and regions across multiple years. I then run the skill with a prompt asking it to find hidden patterns, anomalies, and operational insights, and then summarize the findings for leadership. Claude validates the dataset before generating any insight. It catches negative revenue records caused by aggressive discounting, invalid operating expense values, and missing customer IDs. Now, once the data clears, it moves into business analysis. And it shows that revenue declined in 2024 after 2 years of growth, with most of the weakness sitting in Q4. Then it surfaces the patterns that are difficult to find manually. Slow paying customers correlate strongly with future churn, which makes accounts receivable behavior an early warning signal for retention. Revenue is heavily concentrated in one region and one business unit, which is concentration risk that needs management attention. Skill 2, validate data. If explore data sits before analysis, validate data sits after it. This is the skill I run before any financial workbook, dashboard, or model goes anywhere near leadership. Now, it acts like a senior reviewer who checks whether the analysis itself is actually trustworthy, not just whether the formulas calculate. Now, most reporting failures in finance are not obvious calculation errors. They come from broken assumptions or duplicated data or visuals that look correct but quietly mislead the reader. The numbers look fine, but the analysis also looks professional, but the decision underneath is just built on something that's entirely wrong. So that is the gap that this skill is designed to close. Now, the way it works is it tracks how a senior reviewer actually moves through a workbook. It checks the methodology first. It then asks whether the analysis is even answering the right question. Then it audits the calculations. Then it runs anomaly detection across the whole data set. And finally, it validates the narrative, checking whether the conclusions in the report are actually supported by the underlying data. One of the strongest parts of the workflow is the severity framework. So critical issues get treated as release blocking, meaning that the workbook must be fixed before it is shared. Everything else gets categorized by operational impact. Now, this is what makes this skill behave more like an internal audit process than a normal spreadsheet checker. Now, to run a real audit, I upload a financial reporting workbook. Then I trigger the skill with a prompt asking it to audit the workbook for integrity issues, broken calculations, and audit risks, and then generate a validation summary. So it understands the structure of the workbook first, then begins finding things. So duplicate financial records sitting inside the EMEA region, which would inflate consolidated revenue without being visually obvious. Operating income larger than gross profit, which would imply negative operating expenses. Then we have negative inventory balances and even negative employee headcount. So each one is a red flag that would have slipped through a normal review. It also finds patterns that no spreadsheet checker would catch. One business unit reports margins fixed at exactly the same percentage across multiple periods, which suggests manual overrides rather than real performance. And forecast misses run above 50%, all biased in the same direction, which signals systematic underforecasting rather than random variance. At the end, the skill produces a structured validation report and tells you whether the workbook is safe to distribute or if it needs further investigation. Skill 3, variance analysis. The third skill is variance analysis, and it's available inside Finance plugin. Now, this is the one that solves the question that every leadership team actually asks. Not whether the numbers changed, but why they changed and what management should do about it. This is the FP&A workflow that most teams spend days on every reporting cycle. Traditional variance analysis is a heavy manual lift. Analysts pull actuals against budget, they build reconciliation tables, they validate totals, they build waterfall bridges, and then they write management commentary. Now, most of it is repetitive, but it still requires real financial reasoning. So this skill automates the structural work and produces executive-ready variance analysis in minutes instead of days. The way it is built mirrors how a real FP&A team works through a variance review. It reads whatever data source you give it, it classifies what it is looking at, then filters for materiality so the small movements get out of the way and the meaningful ones get the attention. From there, it does the actual decomposition. Revenue gets split into price, volume, and mix effects. Payroll gets split into headcount and timing. And every driver reconciles back to the reported number. So by the time you reach the narrative, the math already holds together. To run it, I open the FY 2024 financial workbook covering budget versus actual performance across regions, departments, and product lines. Then I trigger the skill with a prompt asking it to compare budget against actual, identify the main variance drivers, and generate an executive-ready FP&A narrative. Claude validates the workbook first, checking whether totals reconcile and reporting periods align. Then it begins decomposing the performance. Both revenue and EBITDA materially outperformed budget, but the skill doesn't just stop there. It isolates the actual drivers. Now, most of the upside came from stronger sales volume and enterprise customer expansion, while pricing pressure and reseller discounting reduced part of it. Strong headline numbers, but the upside is not where you would assume. It also surfaces the risks hiding underneath. SMB performance is weakening, EMEA pricing strength is declining, and reseller profitability is under pressure. These are the kind of structural issues that strong, consolidated growth tends to mask. The skill builds a full EBITDA bridge explaining how the company moved from planned profitability to actual, separating the impact of revenue growth, cost inflation, and operating leverage. The narrative layer then produces leadership-ready commentary. The outperformance came from real operational strength rather than temporary accounting effects, with recommended actions focused on continued enterprise investment, pricing discipline in EMEA, and a closer look at SMB weakness. Skill 4, financial research analyst. The fourth skill moves from internal financial work into external research. It's available inside Big Data plugin, and it works like a research desk that builds company analysis, sector intelligence, and macro research in one connected workflow. Most finance teams need this kind of work, but produce a fraction of it because the manual process is just too slow. In a normal research workflow, an analyst pulls earnings reports, filings, news, and economic data from different platforms before any analysis even starts. So this skill removes most of that gathering layer and lets you spend your time on interpretation, which really is the part that actually matters. So the workflow operates across two areas. Public company analysis covers company briefs, earnings previews, and risk analysis. Macroeconomics analysis covers countries, sectors, and broader market themes. The skill detects which type of research the request needs, and then it routes it accordingly. Now, the way it works mirrors institutional research logic. It first decides whether the work is a company analysis or a macro analysis, because the two require different research processes. It gathers the foundation, then it organizes the findings into the categories an institutional analyst would care about, like growth drivers, risks, valuation concerns. Now, this way, the output reads more like research than a summary, which is the difference between something a viewer can use in a decision and something that they then have to just rebuild themselves. To run it, I open a fresh session and I point it to the research directory. Then I trigger the skill with a prompt asking for a full research brief on the global AI semiconductor sector, including leading companies, valuation trends, and the key themes shaping the market. The skill recognizes this as a sector-wide research project, not a single company analysis, and shifts into a combined market and macro workflow. It builds the foundation across the semiconductor value chain, then analyzes the leading firms across NVIDIA, Broadcom, AMD, TSMC, Micron, ASML, and SK Hynix. Now, it also maps the larger forces shaping the industry, including hyperscaler AI spending, packaging shortages even, sovereign AI investment, and export restrictions. Now, the output is organized into market sizing, valuation, earnings, momentum, and investment implications. Now, the skill doesn't just stop at facts. It evaluates whether earnings growth supports current valuations, whether AI spending stays sustainable, and where future risk emerges if infrastructure spending slows. Skill 5, equity research analysis. The fifth skill goes one level deeper into the same research stack, and it's available inside the LSEG plugin. Now, it combines analyst expectations, company financials, valuation, and macroeconomic context into one investment workflow. Now, this is what institutional analysts run when they actually need to take a position on a name. Modern equity research is heavily fragmented. Estimates, financials, stock price history, macro data, it all sits in separate systems. So before any investment view gets built, analysts spend hours combining them all. So this skill connects those layers into one process and then lets you just focus on the interpretation. The skill is built around a simple idea. Financial metrics only matter when connected to a broader investment narrative. Revenue growth means little without valuation context. Valuation means little without earnings expectations. Earnings expectations means little without the macro environment. So the workflow connects all four together so that the picture stays whole. Now, the way it works mirrors how an institutional analyst moves through a name. It starts with consensus, gathering analyst expectations and showing where estimate dispersion is wide so that you know which assumptions the market is least confident about. Then it pulls fundamentals, reading several years of growth, profitability, and balance sheet quality to get the operational picture. And then from there, it studies how investors have been positioning around the name, then adds the macro layer with the conditions that affect earnings expectations. Then it ties everything together, evaluating whether valuation matches growth quality and whether market expectations look stretched. Now, the output ends with bull and bear cases, the catalysts that actually matter, and then an explicit risk-reward read. To run a real research snapshot, I trigger the skill with a prompt asking for an institutional style equity research snapshot on NVIDIA, including consensus estimates, valuation, macro context, and bull and bear thesis. The workflow builds the company profile first, framing the analysis around the AI semiconductor and infrastructure market. Then it gathers consensus expectations and shows where confidence is strong and where uncertainty is rising, especially around margin sustainability, AI durability, and competitive pressure. The fundamentals review reads how the company evolved through the AI infrastructure cycle. The valuation step compares forward multiples against semiconductor peers and historical ranges so that you can see whether the premium is still supported by growth. The market behavior layer shows how the market has been positioning around the AI trade. And the macro layer adds AI capex spending, manufacturing conditions, and geopolitical risks like export controls. Once all of that is in place, the workflow then connects expectations, operational performance, valuation, and risks into one investment narrative with bull and bear cases, the major catalysts, and a clear risk-reward assessment. Skill 6, Scraper Builder. The last skill is Scraper Builder, and it's available inside Bright Data plugin. Now, the job of the skill is to turn websites into continuously updating data sources, so a finance team can monitor competitor pricing, supplier activity, and market signals automatically instead of running a manual search every week. Now, most of the information finance teams care about lives outside the company. Pricing changes, product launches, hiring activity, industry signals when they appear online long before they show up in earnings reports. So capturing them manually is slow and it's never consistent across analysts. So this skill turns that capture into an automated pipeline. Now, what makes the workflow different from a normal scraper is that it studies how a website actually works before extracting anything. It reads how content loads, whether the site uses pagination or interactive elements, and chooses the most stable extraction method based on that. So simple sites use lightweight extraction, but complex sites get upgraded to a browser-style approach that behaves more like a real user. The way it is built makes it adaptive instead of brittle. It studies the site, it organizes content into structured business fields, and it validates the extracted data along the way. It scales pagination across hundreds of pages on its own, so you don't need to babysit it, and you don't need to have a separate scraper for every new site that you want to monitor. To run it, I trigger the skill with a prompt asking it to build a production-ready financial intelligence scraper that collects competitor pricing, product launches, and market signals, then structures the output into a clean, analytics-ready dataset. The workflow asks a few targeted questions before it starts: what type of site to analyze, the expected dataset size, the preferred output format. I select a e-commerce marketplace structure, choose Excel and CSV output, and then I let it run. It analyzes the data structure across category pages, product pages, and review sources, combining information from multiple pages into one dataset rather than relying on a single source. And it collects pricing, discounts, ratings, and inventory signals, and handles pagination on its own across hundreds of pages. Now, during collection, it runs quality checks. Duplicates are removed, missing fields get filled from cross-references where possible, and the dataset tracks where each piece of information originated. Now, the final output is a analytics-ready folder with separate sheets for products, category summaries, review summaries, and diagnostics. From a finance angle, this is where it all pays off. The dataset can feed pricing analysis or competitive benchmarking and demand monitoring directly. Finance teams could track competitor discount activity during seasonal campaigns. It can identify which products even are gaining traction or detect inventory shortages before they affect market pricing. Investment teams could use the same approach to track demand signals ahead of earnings releases. And that is pretty powerful if you ask me. And that's it. That's the full set. 6 skills covering the actual finance workflow end to end. Remember, if you want the prompts, the install commands, and the data sets from this video, they're all in my free community, and the link is in the description below. And I'll see you next time.